Welcome back. So today I'm going to refute a lot of the misleading narrative that's going on out there in the housing market. And my headline is Sunbelt holds long-term housing edge, even as pandemic boomtowns struggle. What I'm talking about, the glut of oversupply of inventory in the Southeast and the Southwest, the Sunbelt boomtowns, if you will. And of course, conversely, yes, there has been a extreme supply shortage in the Midwest and the Northeast, and therefore, allegedly, housing prices have increased surprisingly in the Midwest and Northeast due to the lack of supply of homes, and which has the opposite effect in the Southwest and Southeast. Now, I know there's a lot of negative news and a lot of doom and gloom information being put out into social media, in the mainstream media, about the demise of the boomtown Sunbelt market as a result of overconstruction, as a result of supposedly the supply exceeding demand, and some people calling for a housing crash in those markets. So I'm going to share with you some data that will potentially refute these allegations. Because when you watch the mass media, the mainstream media, they love to paint a negative picture for whatever reason, clickbait and negative news sells. I get that. But you see, the problem is they put you in a little hole, in a little short-term volatility thing. They don't project into the future. They don't provide you the real concrete data about trends and what really is going on. So they don't really dive deep into it. So I'm going to dive as deep as possible with you, just so you are better informed about what really is going on in the housing market. Because once again, I've been doing this for several decades. I work with builders all over the country for several decades to supply my investors with cash flow, entry-level homes, many part of the country. So I understand the short-term and long-term perspective. Without further ado, let me share with this article as provided by John Burns Consulting, a very reputable housing resource. So again, the headline is Sunbelt holds long-term housing edge, even as pandemic boomtowns struggle. So what does that mean? That means here it is. The U.S. housing market is telling two different stories. As pandemic era boomtowns are cooling rapidly, while the Sunbelt long-term growth outlook remains strong. That's right. According to John Burns Research and Consulting, we just I don't know how to just a surge in available homes. Oversupply is reshaping the market in regions that saw fastest growth during the COVID-19 pandemic. We know that. We know what's going on. Nationally, the number of resale homes on the market in April climbed 21% compared to a year ago. Yes, there's a glut of an oversupply of new construction in the Sunbelt markets. And this graph illustrates that based on the resale listings only. The resale listings, which is April, 25% above, and versus the Burns Home Value Index year-over-year change. As you can see, right down here, it just pretty much validate what you've been hearing if you've been watching the housing market news from various sources. Austin and Florida and Texas and the Southwest, Arizona, Nevada has gone through a lot of inventory glut, if you will, while the Midwest and Northeast is having supply shortage. Therefore, they are getting their housing prices are increasing, which is, to me, is pretty surprising. So the report points to pre-pandemic inventory as a clearer measure of pressure. North Florida currently have 38% more resale homes than in April of 2029 prior to the pandemic. And Texas, same thing. It currently have 37% more homes than the pre-pandemic. And the Southwest in general of the U.S. have 23% more homes. So as a result, these regions are also where prices are softening, not crashing, going through some minor correction of a few percentage points decrease. We're not talking double-digit housing prices decrease, to my knowledge. Okay, so as you can see right here in Austin, there are 91% more homes for sale than in 2019, pre-pandemic, and prices have dropped a whopping 2%, 2 year over year. I know some of you are thinking, oh, in certain zip code in Austin, price drop, housing prices have dropped 10, 15%. Yes, in certain zip code in Austin, that might be the case. But according to this data, overall in the Austin metro year over year, prices have dropped a mere 2%. By contrast, Orange County, California has 41% fewer homes for sale than in 2019, with home prices there rising 5%. Real estate is local. In fact, real estate is hyper local. It all depends. It all is about the local neighborhoods, the specific zip code. One zip code is different than another. One neighborhood is different than another. So there's no such thing as a national real estate market. Real estate is hyper local. Builders are slowing construction activity to match weaker sales. Understand they're providing a lot of builder incentives, mortgage rate buy down, closing cost reimbursement, the whole 9 yards, and they're selling. However, Sunbelt's job and population growth remain strong. It's all about the fundamentals. It's the fundamentals of real estate. If there's a strong job and population growth, the fundamentals is which is the key about real estate. So you have to understand, if you learn nothing else, the fundamentals of real estate is if there's a strong job, population growth, and job growth, and there's migration growth, and the homes in that particular market is affordable, then there's something there. So that's what we look for. So Sunbelt's job and population growth remain strong long term. So therefore, I believe this oversupply glut of inventory will be absorbed into not too distant future, especially when the mortgage rate, if and when they come down to closer to 6% or slightly lower than 6%, then we can have some strong people can get off the sidelines at that time. But right now, as the mortgage rate is hovering around a whopping 7%, so that's why it's causing demand to subside. So furthermore, again, while supply is driving the current market trends, the long-term picture hinges on where people are moving and where jobs are growing. You cannot get away from the economics 101, the fundamentals. Domestic migration continues to favor Sunbelt cities. I know what you're thinking. Migration has been historic during the pandemic boom, right? In 2020, in 2021, in 2022. But now the domestic migration into the Sunbelt has subsided, okay, at least temporarily. But people still are migrating to the Sunbelt from the cold weather areas. In my mind, for the foreseeable future, for years to come, actually, for indefinite periods of time, okay? So domestic migration continue to favor Sunbelt cities. Jacksonville, Florida, along with North Carolina hubs, Charlotte and Raleigh-Durham, remain as top destinations, while traditional coastal hubs like LA, New York, Chicago, San Francisco Bay Area, where I live currently, are losing residents or still losing residents. Furthermore, the international migration has helped offset these losses. People from all over the world are still coming to the U.S. for jobs, better life, and etc. So this map shows the big red circle is these areas of losing migration: the Metro Miami, the Metro Tri-State New York City area, Southern California, and Northern California, mainly in Chicago. These large metros are losing population still based on this graph: net domestic household move outs and move in, and the recipient of the immigration or, still, or the Sunbelt, still the rest of Florida. That's right. The other areas of Florida are still getting migration from out of state. Not as much as during the pandemic. I want to make sure about that. Texas, same thing, are continue to receive the recipient of the net migration into Texas and Florida and North and South Carolina and Tennessee and a few other places. That's how it is. So employment trends reinforce this divide. Northern Florida up 1.4% annualized job growth in April 2025. Texas up 1.3, U.S. average up 1.2, Southwest 0.1, Southern California 0%. The Sunbelt metros have surpassed their pre-pandemic employment levels. As a matter of fact, Alice, it's a song I just heard from Little Feat, Lowell George. Dallas is up 11% compared to pre-pandemic COVID peaks. I don't know about you, but 11%, I believe that's the fastest growing percentage-wise nationwide. I'm just giving my opinion because I happens to promote Dallas turnkey real estate investing for my investors. So North Dallas is number one housing market for mom and pop real estate investors for cash flow and appreciation. So watch my other videos, you will learn more why that's the case. So Dallas is leading the pack in terms of job growth. So same thing, Orlando, same situation. Although the housing market there has cooled off, but the future housing demand will rebound. These pandemic boomtowns in the Southeast and Southwest, long term, they will rebound. So don't get caught up in this short term hole that all this social media, mass media try to put you in. But there's a silver lining. You have to look beyond this short term volatility. And so finally, the strong demand. Here's the recap. These contractions highlight why a long-term perspective is essential for identifying opportunities. This report says by John Burns Consulting. The strong demand fundamentals, jobs and population growth that drove the Sunbelt growth during the pandemic haven't disappeared. They're just temporarily overshadowed by a supply glut. This supply glut, like I said, will be absorbed. How long it's going to take, I don't know. There's a lot of economic uncertainty and this and that, and the tariff and recession fears and all that stuff. But at the end of the day, the fundamentals will exceed the fundamentals of real estate, the economics 101, when there are job and population growth in a particular region. And when the home prices in those regions are affordable, you will see mass migration. You will see better future. So that's the recap. So don't let these negative headlines affect you. That's my takeaway. As I conclude this video, if you get any value whatsoever from this video, please like and subscribe and comment on my video and share your thoughts below. And also, so I can increase my YouTube channel viewership. And also, if you have not already done so, put your email into my subscription, into the body of the description here, or into my website, so you can become a free member of our real estate investing community. You put your email on there, and so on a weekly basis, you will receive in your email inbox free investment in education about real estate investing. Thank you so much. This is Siwen Yi. Have a nice day. I'll see you next time. Bye-bye.